hope you had some good coffee. So before we do the panel, I'll just introduce Rama Variankaval. He's the Global Head of Corporate Advisory and Multiple Business at JP Morgan to kick us off, and then we'll take over for the panel.
Right. Thanks, Parth. Can people hear me okay? All right. Well, thank you, Professor Lal, for inviting me. As Parth said, I run what we call corporate advisory at JP Morgan. So think of it as a traditional banking business. Includes a lot of kind of M&A, capital raising type things. I also run our infrastructure business and all things to do with climate and sustainability at JP Morgan. I've been at JP Morgan 23 years, worked across multiple sectors, multiple geographies, multiple products over the course of the 23 years. But if I have to be honest, I don't think if I think back and create my greatest hits at JP Morgan, water is not going to actually show up. And that's not, I don't think that's because I am not interested in the topic. I'm quite interested in the topic. In fact, water and food are topics I've always been interested in, personally and professionally. But it's just, I think, a reflection of where we are, where the sector is in terms of the participation of big players like JP Morgan. Of course, we heard about a lot of VC companies, innovative technologies. That's a different segment of the market. But the transition from that to kind of being a JP Morgan client, it's a rocky road, right? And lots and lots of companies in a variety of emerging sectors, by the way. It's not just water. I see that in food. Energy is kind of also going through the same growing issues, if you will, especially kind of renewable and newer forms of energy. So it's what it is, right? So I don't know much about water because of that. And on the way here, so I'm based in New York. I took the flight last night from New York to Phoenix, and I said I should use the time to kind of do something with water so that I sound smarter than I am. So I downloaded a book. It's called The Worth of Water. I don't know if anybody has read it or I heard it on the audiobook. It's written and narrated by two people, Gary White, who I didn't know, and Matt Damon, who I did know of. It's a fantastic book, also perfectly timed for that flight. I could finish it in that 4.5 hours, start to finish. It's interesting. One of the things I learned is they say that the UN denoted the 1980s as the global decade of ending the water crisis, the global water crisis. As a kid growing up in southern India in the 1980s, I can confirm they were not successful, right? If anything, the crisis is worse, right? It's global, lots of reasons, and I'm here because I'm hoping that I learn kind of ways that the smart community, the expert community is thinking about solving this crisis. As a banker, again, one of the occupational hazards I have is we over-index on kind of the now and the here, right? What's driving capital flows right now, this moment? What should our focus be on? And obviously, no prizes for guessing. That answer is AI right now, right? I think we've talked about AI in multiple panels here. The amount of new build that is going into that sector is obviously quite staggering. I think it was Palak who talked about the capital numbers, trillions of dollars. Again, 2025, they did about $1.2 trillion from 7 hyperscalers, right? So basically kind of, and so hence they're story of the day, maybe the year, maybe the decade, which is kind of good news and bad news, I think, for two areas where, again, AI kind of quite profoundly touches. One is energy, and the other is water. And I was just, Raj and I were just talking on the way here, right? Energy is kind of in a better position because, the size of data centers is measured in gigawatts. So it's very obvious. You're building a gigawatt data center, you need power. And the impact to kind of, that power is quite obvious. Perhaps there should be a metric of measuring data centers in gallons of water. Somebody said, a data center requires 5 million gallons of water daily. And actually, Damien was saying that's an underestimate, that it actually needs even more. Right? So clearly a big issue, but AI and what it does to energy and water, clearly a big theme in my mind. The other thing we are seeing naturally is a trend that started, I would say, right after COVID, which is a kind of a fragmenting of the global economy. And that's only been accelerated in the last 12, 18 months, where every country, geography, region wants to kind of be more resilient the catchword in kind of, in the New York City Davos circle for 20 years was kind of efficiency. How do we make the global economy more efficient, right? How do we kind of, parse various activities and capital flows to the right place such that we can all be more efficient, drive profit margins, drive shareholder return, et cetera. Now the buzzword has kind of become resiliency. Everybody wants to be resilient. They want to kind of, reshore production of goods and services that they need to their local economies. Clearly, that has implications for energy and water as well, right? If, in the US, we want to reshore and remanufacture things, that's obviously going to be a pretty direct and impactful thing for water. So that's, again, a very important driver in my mind. The third, obviously, here we are sitting here, as the war rages on in the Middle East, what it does back to kind of energy and also to water, clearly top of mind, moving markets, let alone the human cost of war, which is profound. So there are all of these kind of factors that are driving conversations, at least in kind of my experience as I go around, travel the world. I don't know whether all of these collectively are a tailwind, are they a friend or a foe for water investment, right? That's what I'm hoping this panel will, educate us on, right? These guys are experts. Prad here is my colleague from JP Morgan, knows a lot about water. But I'm very curious. I love to kind of, see JP Morgan get involved more in water-related projects. We have, over the course of just this last few years, we have announced a bunch of big initiatives, right? At the beginning of the decade, we said we want to finance or facilitate $2.5 trillion worth of projects through the course of the decade that were aligned to the UN SDGs. And we are making progress. We are about, linearly on track, if you will, 5 years in. Just, late last year, we announced we want to do $1.5 trillion of financing and facilitation for projects and companies that we think are aligned with the security and resilience of economies that we consider friendly, let's call it, right? And so again, there are all of these big initiatives we are throwing out there to essentially put a sign outside JP Morgan saying, please come talk to us, right? If you have projects, companies, ideas you think we can help with, please come to us. And I'm hoping, again, we do get a lot of inbound. The challenge for us, of course, is that we don't finance technologies. We don't know how to finance technologies, I should say. We finance technologies that are wrapped in a viable business model, right? Where we can actually, put it in an Excel model, figure out what, the cash flows are, how do you value it, who's paying back the money, et cetera, right? So that bridge, how do you go from an interesting technology to a viable business model, I think is a challenge in water from what I can see. But I'm optimistic, people like yourself will solve it. With that, I'll give it to Prad.
Thank you, Rama. Thank you, Manu, for inviting us again. I think one of the thought I had was if we achieve abundance with AI, robotics, and all this, what we will be doing. Beside, I think, going to cafe, going to beach, I think we would still come back to a water conference like this. So I think I was expecting a little different crowd. We can do a quick poll. I think we can cover like different topics to be useful. How many are students exploring water as a career option? Raise your hands. Okay, quite a few. Professors looking for research ideas. Okay, almost similar. Water business people, operators, running companies, business development. Okay, so consulting, financial services, all included. And then government, policy, regulators, those kind of people? None. Okay. Oh, one. Okay. So we have a mixed crowd. We'll try to make it useful. So you already heard, like, I think we have to spend a lot of time on AI, given what people are interested in. But I was thinking, let's start with a little bit of a primer. So to just start introducing Damien, he's a lawyer, 30 years experience in water, has seen like multiple waves. And then Henry is the CEO of Seven Seas, which is a portfolio company of a private equity fund. And then Raj is a portfolio company, chief revenue officer called Integrated Water Services, which is a portfolio company of Science, the fund which is a sponsor for this event. So I'll start, Damien, can you do the heavy lifting? Give a primer on what has changed in, let's say, last 5-10 years. Summarize for a more general audience.
Certainly. Can everybody hear me? I think the biggest change, water used to be, when I got in this space pre-2000, people didn't understand that there was a water space to begin with. When you talked water, investment bankers couldn't figure out if it was a utility, a regulated utility, it was clean tech, it was diversified industrials. Nobody knew what water was. And what we have with the first wave in the 90s was popping up this notion that water is a definable asset class. When you look then in the 2000s, you saw a lot of transactions going on with people really groping as to what is this thing that's so vitally critical. Then I think you got the next wave, which was a segregation of investments, because the water space is a $1 trillion marketplace growing at triple GDP rates around the world. There are some, as you evolved in the 2010s to now, you find that investors are looking at it because water, there's no more water on the face of the earth since time began, yet we keep on having more and more uses for water, not just because human population is growing, but because industry is also becoming more water intensive. When you look at, for example, AI, we talk about data centers. Data centers is the most recent tug on that limited supply, that fixed supply of water, that's causing everybody to focus on the water aspects of AI. And by the way, I saw some information up there that I think is a little light. The most recent that I saw from Bluefield Research is that it's in the US alone, it's something like 1.4 trillion gallons of water a day at today's rates. You also see in connection with that new evolution, which I think we're at a very positive inflection point from an investment standpoint, you see what you would normally see from an economic development side of things, or an economic curve in any industry that hits that hyperbolic inflection point where people are looking at it and saying, and this is the recent last 5 years, where do I want to play? All my LPs for fund investors want me to be in water. I don't know much about it. And so I think what you're seeing is people coming around to realize, what's my check size and what investments are available at that check size? Where do I want to be from a technology evolution? Am I early stage? Am I a young VC? Am I growth capital? Or am I at the higher end of the chain from a check standpoint, where I may be called an infrastructure fund? Because I sometimes wrestle with the term infrastructure because it sometimes loses its meaning. But what you see right now is more of a focus on not just technology, and these two companies certainly represent this, but you certainly see solutions, complete solutions to your water systems. And that's true not just for a municipal side of things, and they both play in municipals, and they can talk about that, but on the industrial side, which, as I mentioned, includes the data centers. It also includes chip plants. Chip plants, 25% of the capital cost of a chip plant, we have them here in Intel in Chandler, 25% of the cost of a chip plant is in water technologies. They make the purest water on the face of the earth, yet they have some of the most complex wastes coming back on the outside. So people are now outsourcing their water treatment systems, industrial as well as municipal on the services side. You have new companies that are coming in and saying, I want to be your solutions provider. And I want to do that in a way that makes you reliant on me, i.e. you've got a long-term contracted facility for that. And you need some technologies to help you along the way. And you see some really new technologies that are coming out that we saw early this morning from the one professor about, MBFBR or whatever it might be, MBR. those technologies take a longer time to adopt on the municipal side than they do on the industrial side. And it's just because the municipal side in the US has historically been difficult. Easy to finance, but it's been historically difficult because a lot of the operators just don't know how to evaluate technologies. And they don't know, they don't want to be that guy that screwed up their water system. So the biggest, the takeaway points are you're getting at a positive inflection point. You're getting more to solutions providers. You're using more AI ML. We heard that this morning. I know a ton of companies out there that are on the AI ML side. It comes down to the value of water.
Yep. I think what I hear is much more private sector involvement. And that creates a lot of different opportunities for many, many different players. And as you hear, the sector, of course, you appreciate is very complex. I mean, just because we wrote a white paper, and so we have been doing tons of research. I mean, if you think about the waves, these are like multi-decadal waves, right? 18th, 19th century started with chlorine treatment for London, New York, kind of the concept of public utilities. And then 1930s, 40s, the New Deal, all this big, hard infrastructure, right? So that was the second big wave, with some CapEx cycle maybe lasting 30, 40, 50 to 90 years, right? Some of the pipes, dams can last 90 years, which again, coming to end of cycle at this point. And the third wave was, okay, maybe we push too much on the dam and hard infrastructure. 70s EPA, environmental treatments, like other kind of things came in. So maybe chemical became a big industry as well. And then finally, I think what you were saying is now that demand side again is going up because we somehow stabilized the demand side over the last 50 years, despite the GDP going up and all these new sectors emerging, it creating a lot of opportunity. Just one stat I would like to throw. I think in US, the ag is roughly what, 40%? The thermal power is another 30, 40%. 10, 15% is municipality, and 10, 15% is industrial. So if you
By volume or?
by volume, yes. And then, so that if you roughly think about that, that means all the growth. And if you like see the long-term time series, I think Muni has stabilized. So what I think we probably will get into further is on the like other kind of big mega drivers.
I'll shut up after this. But
Yeah.
the one big thing that you do see happening, and these guys are witness to it. You see folks like JP Morgan coming in, EQT, Science Capital. You see a lot of the institutional money coming in. And you also see now this new pivot on the VC side because they're LPs saying, I want to be in water. You have a new wave coming in of philanthropic investing too. But realistically, I think where it's coming down to is you've got companies that say, I'll take care of your water problem.
Yes.
And you don't have to worry about the water problem.
So you heard a lot of interesting ideas from research in the morning. Now you hear like this macro picture, but ultimately we all agree now it's all about execution. So we have two big operators. Henry is probably my favorite water CEO. So Henry, if I can come back to you, first of all, again, we have a mixed audience. Can you just explain simply the business model of 7Cs? And then we'll have a follow-up.
Yeah, thank you, Prad. Thanks for the invitation. Thanks to Science Capital. So 7Cs Water Group owns and trademarks the name Water as a Service. So that, in a nutshell, is what we do. Differently than many others in the past, we do take away the water and wastewater headache from our customers. We not only engineer and then operate and maintain long-term water and wastewater plants, but we finance them. So in other words, if you are a municipality, if you are a industrial client, if you are in Texas, very often they're called municipal utility districts, MUDs, and you require a water wastewater treatment plant, you come to 7Cs and we will do the whole 9 yards. We will make sure that you only pay if and when we deliver the quality of and quantity of water and wastewater we are contractually obligated to provide. And therefore, the private sector, in this case, Seven Seas Water Group, comes in and puts the risk on us, the burden on us to deliver that vital good. And we walk away from the old times where a lot of municipalities, after the plant was built, after 18 months, they have operational issues. They don't have the money to maintain them correctly. They have human resources issues because they don't have the operators. This is then with Seven Seas. And I've been in the industry for 20 years and with Seven Seas for about 5. And I can tell you, maybe a little biased, I think this is the winning model in the industry. The same thing that has happened in power and solar and oil and gas, where you outsource non-core structures. So this is what Seven Seas does.
Before I go to Raj, one follow-up. Could you say what is actually the driver of value? Customer stickiness, recurring revenues, compliance, cost? How do you see the value?
The value that we provide to the customer?
Yes.
I think ultimately what we provide to the customer is a relatively fast-paced solution to a always difficult and long-term project. Water and wastewater tend to never happen quickly. And so with us, there is no financial close. There is no requirement to go out for bonding. We would love to help our clients in finding the lowest cost of capital structure. Once they sign with us, to find a way to reduce that cost, to go for municipal bonds, federal grants, state funding, whatever it may be. So I think that's number one. Number two is the quantity guarantee and quality. Okay? Again, we don't get paid until we do what we say we do. And three, you do not have to go out for an engineering consultant to tell you ultimately what your plant needs to look like and then bid it out. We do that all, and we do it pretty well. Seven Seas has been around for 30 years. We have over 220 plants that we own and or operate. So I think there's a lot of reliability with it. And of course, the ownership structure, which used to be your cousin's Morgan Stanley, is now EQT since last August, gives the client also the comfort that if a $26 billion fund is behind you, that you will execute as we promised we would.
Raj, just quick, one of the things that you also have to think about when you're looking at on the industrial side, it used to be, again, things that have changed. It used to be that if it was inside the manufacturing fence, I wanted to own it. But now they've realized that compliance, I make widgets, I don't make water. And so you see them migrating away from a compliance perspective, an expertise perspective, saying, I'd rather have a 10-year contract rather than, or however long your contracts may be, I'd rather have somebody relying on my full faith and credit rather than me deploying capital that I could, if I'm a Mag 7, make 80% on. I'd rather have somebody else make it who may be in an infrastructure fund that may not have the same return profile.
There is, of course, ongoing debate. In US, for example, 80% of the water utilities are public utilities, 20% are investor-owned. What is the right mix? And as Henry was pointing out, actually, I had the same debate with our global head of public finance, who does the muni finance, and has similar views, which is that ownership, public utilities, but a lot of innovation and O&M contract pushing out, so that private sector's entrepreneurial and the spirit comes in, solves this problem, and everybody's happy. At least that has worked in this country. There are different, this is again a debate between US, let's say, what is the optimal structure for China, India, Europe. That could vary because the trust issues are different between public and private players. But I'll agree with like what you were saying. Raj, can you again almost repeat your business model, value drivers, and anything else you want to challenge Henry on?
Sure. Thank you very much. Good morning, everybody, and thank you, Professor Lal, for organizing this. Very excited and happy to be here. So what IWS does in very simple terms, we basically solve our customers' water and wastewater needs. We provide products and solutions for that. And our customers are typically municipalities, private utilities, home builders, developers, industrial, hospitality, casinos. These are our end user segments that we focus on. But we do it differently. We don't do it in a traditional way. I think we were listening to the president of the university speak this morning that you have to come up with the new solutions, and that's exactly what we are doing, right? So traditional way of solving wastewater treatment needs is complex systems, highly engineered, takes a lot of capital, years to develop. But our model is completely different. We have decentralized systems. These are modular, scalable systems. So if our clients have needs of, let's say, they want to start off with 50,000 gallons per day and they want to get to 200, 300,000 gallons per day, we do have those modular solutions that are scalable. So they don't have to put all the capital up front. And internally, what we call it is we have designed repeatable, standardized solutions for our clients' custom needs. That's what we are trying to specialize in. And our focus market is sub 3 million gallons per day, because we believe that's the market that's very fragmented and largely underserved. And those are the customers that we are trying to, solve their needs. And what differentiates us in the marketplace, I mean, Seven Seas is an amazing company, but what our differentiation is, it's a vertical integration play. So I think everybody learned a little bit about membrane bioreactor technology this morning. So we own that technology. And then we own the facility where we actually fabricate these modules. And then we own the control systems or the panels that go into these modules. So by doing so, by having this vertical integration, we have better control on the cost, the quality, and the speed of delivery. And that's our differentiation in the marketplace. And then finally, we are just relentless about flawless execution and lowering the total cost of ownership for our customers. And we do that through life extension services, whether it's retrofitting, and we do that through aftermarket sales and service support, which is critical to create value. So that's our business model.
Got it. I think in interest of time, I think let's move to the main topic, which is the mega trends and how they affect you. The big set of risks and opportunities, I have found it easier to frame it in some Ds, like to make it easy. Deglobalization, that you can throw all the geopolitics, war, everything there. Digitization, AI, data center, chip, we can get into that. Actually, within digitization also, I would encourage you to talk about the cybersecurity side, if that bothers you. And then decarbonization, that's an ongoing trend, despite, of course, a little bit of a push for natural gas and LNG for data center particularly. But nuclear, geothermal, I mean, all these renewable energies are going to get bigger share of the energy side. So that's 3D, and then I added drought as a D, although that's like drought and flood, like resiliency side. Henry, of course, you operate everything in like a lot of facilities in Caribbean, and you have experience in like other parts of internationally. I remember Prep Call Henry has done desal plant which are not supposed to be bombed in a war. So can you start, Henry, with all this big risk opportunity factor and like what are kind of top 1, 2, 3 for you?
All right, so I'm going to speak for the next 3 hours.
Yes.
But just starting at the end, I think even now in the current war with Iran, all of a sudden water has become front news with the bombing of desalination plants in the area. And what Prat, I think, is alluding to, I used to run a company called Fluence, and we were involved in a negotiation back then with ADNOC, the Abu Dhabi National Oil Company, to build desalination plants inside a mountain in Abu Dhabi to protect them from a potential attack from the Iranians. That was 10 years ago, and everybody, no, more than that, 14 years ago. And our board thought that we are going down a rabbit hole of something that would never happen. Reality has proven differently. So decentralized plants, where I think Raj and I totally agree, is the key. And when it comes to data centers and everything else, look, I've been in this space for over 20 years. There's always something that I call as a herd mentality. There's always somebody running after certain things. Professor Rittman spoke this morning about anaerobic digestion. I've been involved with anaerobic digestion since 2012. We own a company, Fluence, we own a company that I acquired in Italy that had 70% market share in the poultry business in Italy, and did anaerobic digestion back then. In the US, unfortunately, we're a little behind. So there's a lot of this herd mentality. When it comes to AI, I don't think it's that different. The biggest consumer of water is not the data center. The biggest consumer of water is the power provider. And for those of you who may have listened to the very long State of the Union address by the president, he said that going forward, there will be a requirement for these data centers to have an independent power source. Well, I serve on the subcommittee at the Department of Commerce, and I believe that there is no water, there is no data center. So as much as he focused on providing an independent power source, I think, especially in the southwestern United States, where a lot of those data centers go into the ground, we have to demand an independent water source. The data center itself very often uses a self-autonomous cycle of recycling water when it comes to cooling, when it comes to data center. Most of it goes for the power plant. But what is very key, as you see in those areas in Arizona, New Mexico, and especially Texas, is population growth. And although many of us may believe it's hard to live without a cell phone for a couple of days, try water. So what we need to be sure of is that there are fresh water sources, to your point. Seven Seas focuses on brackish water sources. We signed the first public-private partnership in Texas for a brackish water treatment plant for a 30-year guaranteed supply of a brackish water source into the aquifer, not surface water, but from the aquifer. If a municipality has that source of water, they can provide water to the population, to the power plant, to the data center. So it's a bigger picture that I think has to be looked at holistically rather than just the herd mentality, data centers. Let's all talk about the enormous amount of water. I think there are some very interesting areas, and if you are an investor of the big data center producers, it sort of is the first thing you look at is land. The second thing you look at is power. And then subsequently you realize, gosh, there's no water. Well, maybe we should think about that at the same time. And that's the risk that I see, is that we get ahead of our skis and not finding a sustainable, reliable, cost-effective water and wastewater solution for those new enormous amount of areas that we grow into.
Just for real quick context, I'd put it the other way around. We do a lot of economic development for the data centers. Now you see water being the first question. And we kind of glossed over the whole water energy nexus. 40% of the cost of energy is water, generally. And so there's a huge water energy nexus. The numbers we talk about on AI water usage is just direct usage. There's a whole indirect usage, which is a multiple more of that for the energy production. I think people don't realize that. And more importantly, I think what Henry is describing, he's spot on. We went to a distributed energy model 15 years ago, where you made the electrons locally instead of big honking centralized systems. That's completely appropriate for where water's going right now. You need to keep it in place, recycle, recirc, reuse, cut down the carbon footprint, and you don't have tugs on the wastewater systems or the municipal drinking water system.
Before I go to Raj, I think starting with Manu Rama, like everybody today, AI data center is the focus. I'll also throw some interesting stats. I think everybody probably already understands, but roughly I was trying to remember what is actually interesting, right? So you have, scope 1, scope 2, scope 3 emission concepts, right? Raise your hands if everybody knows that concept. So for data center as well, we have similar concepts. The scope 1 is direct cooling, what we're talking about. Scope 2 would be the water needed for the power. And scope 3 would be the supply chain water usage, right? And so scope 1 is like 20% roughly. If your emission grid is like all fossil fuel, 80% is all power, what Henry and they're trying to point out, right? So, and then the third part I think is even less appreciated, which is the scope 3. And this is again for the academics. I don't think there is tons of research in terms of how do you quantify, exactly show in the continuum of scope 1, scope 2, scope 3. I've read a lot of research. It will be interesting. So this is quiz question. What do you think, whose water footprint is higher? Like Samsung, TSMC, who produce this chip, part of scope 3, or the hyperscalers like Google, Microsoft, Meta? Who do you think has higher water footprint? TSMC or Google? Google? Anybody for TSMC? Yes? If you just try to see later on, Samsung, TSMC will be like 10, 15, 20 times in magnitude of total water consumption. And so these, like cheap is, these centuries, of course, I would say cheap is the actual oil. And within that cheap, it's like the most complicated process. And every process for cleaning water is needed. And that's not simple water, it's ultra pure water. And, so scope 3 basically is like really, really high, which is, I thought, less appreciated. Coming back to Raj, just continue on that big trends in terms of opportunity and risk, like how do you prioritize? I know it's a multivariate equation, but just give your priorities.
Yeah, I think from opportunity standpoint, like there are various factors at play, but if I have to prioritize, I would say the aging infrastructure is probably the number one driver that I see in the marketplace. Most of the infrastructure in the US is old, whether it's 30, 40, 50, 60 years old. It needs to be replaced, retrofitted, upgraded. So for us, that's the biggest opportunity that's at play. And then definitely reindustrialization. We are seeing the demand is, through whether it's manufacturing processes, food processing, semiconductors we talked about. I know there's AI and data center, there's a lot of, spotlight on that. But like I just put them in the same bucket of industrialization and, infrastructure. I'd rather talk more about the risk that I see. And this is because, I come from most of my career is in the oil and gas. So I've been in the water industry for almost a year. So probably, these guys will forget in a day what I'll learn in a year. But what I see as the biggest risk is twofold. One is the underinvestment, both in terms of capital and talent. And what I mean by that is, if you look at the oil and gas sector, I always like to compare, oil and gas employs roughly 2 million people. And water and wastewater also employs 2 million people. But oil and gas is 1.5 trillion, almost 5-6% of the GDP, whereas water is only 200 to 300 billion, which is only 1% of the GDP. And this trend is not just the US, this is global trend. So there's a massive underinvestment that's happening. So forums like this, more education, more interest, from the investor community is definitely needed. And the second thing which I have experienced is on the talent side. So again, comparing and contrasting with oil and gas, oil and gas has the benefit that there are centers of excellence. So for example, I live in Houston. Houston is known for oil and gas. If you're in Canada, Calgary is known for oil and gas. You have Saudi, you have Norway, you have London. But these centers of excellence generate that talent pool that's needed to further kind of build businesses in that space. Water doesn't have a Houston, right? Water needs a Houston. Water is very fragmented because it touches every part of the economy. But there is an interesting stat, probably Henry can shed more light, but I think 30 to 50% of the workforce in the water wastewater is going to retire in the next 10 to 15 years. These are like operators, technicians, plant managers, engineers, and we are not replacing that talent with the new people that are coming into the field. So that I see is the biggest risk. There are a lot of opportunities at play, but can we really scale up both in terms of capital and talent?
So capital, talent, your opportunities, aging infrastructure, reindustrialization. Henry, can you point out like quick rapid fire, like what is your top opportunity and risk, just in very short?
I think top opportunity for us continues to be Texas and the southwestern United States. You have water scarce areas where water is vastly needed. New York City, as an example, for those of you who know and been in New York City, if you live in New York City, your water bill is included in your rent, which any economist around the room will be able to opine that then it's wasted. If you live in the southwestern United States, I'm pretty sure you know what your water bill is. So the biggest opportunity and risk is the value of water, to price it accurately, and to have the private sector get into the aging infrastructure discussion. Because ultimately, as a taxpayer, we will all end up paying for it if the public sector does it, but hopefully there's a benefit for the private sector to put their money where their mouth is, be involved, and then have reliable water sources and solutions. So I think there's a risk and opportunity, and I believe we are at the forefront of it, but I think there's lots more to do, and there's, I think the biggest challenge we have is what I call the old boys network, is that people say, that's how we've done it all the time, so we have to continue to do it that way. I think what IWS is doing, I think what 7Cs is doing, what we should be doing is change the mindset and how to do it better.
Okay, we are kind of at the last segment. Damien, if I can start with you. What should this audience take away and think about for next 1 to 5 years? What's coming?
I think a couple of things. Number one, hopefully you will never think about water the same way. You'll never just pour water out of the spigot and say, hey, it just came, it just showed up. So what I would like to take away is the water system in the U.S. is broken. It received a D- by the American Society of Civil Engineers, the lowest of any infrastructure. The investment levels are way too low. The Jobs Act and $1.9 trillion for infrastructure. Water received the least amount at $55 billion. Of all the infrastructure that they invested in, there's only one that you can't live without, and that's water. So I think the one takeaway would be we've got to think about water differently. I met my friend Rich Razgaidis back there, who has a company called Flow Water. He wrote a book for children about water to start changing the mindset of people as to how they think about water. The next piece of it is then the value of water. We have a broken, and just on the municipal water system size, where number one, we give large users like in industry discounts for volume when that may not be right. And we price things based on return on capital rather than having, I'm a big proponent of having private enterprises on the municipal side and across industries, because then you have a profit motive that allows you to come in and look at things differently. You're not going to have runaway prices. We didn't see that when you deregulated the energy side of things. And so I think part of it is just understanding that the system is broken, it needs to be fixed. The amount involved is so large, government can't do it.
Okay, so this is like not necessarily 1.5, maybe we are talking about like a multi-decadal trend of CapEx to upgrade with a new standard, right? Henry, last words, what should the audience take away?
I think when we talk again about AI, if you are a data center investor, there are huge amounts that you invest. Water is not even this much. It's a very teeny tiny part of the investment. So we got to get it right. We've got to talk to everybody to value water right. And I think we've got to understand that if we don't have the right water delivery infrastructure, the way that we finance so that water gets to those who need it the most, we look at the wrong spectrum of water. It is not anymore only about innovation and technology. It's how we integrate those technologies and that innovation and structure it in a way that it becomes affordable and available rather than just an academic exercise.
Good. Raj?
I think the key takeaway is like water, there's just a lot of misconception about water. Like it's just a commodity, it's a slow-moving industry, there's not a lot of innovation. And I hope through all these sessions, probably people got a glimpse of, there's still a lot of innovation that's happening. There's tremendous opportunity to disrupt this space. It's largely fragmented. So whether it's, students who are kind of listening in, I would encourage you to seriously look at water industry as a career option. Or investors, there's tons and tons of opportunities to actually create platforms, to create value for the customers and for the businesses. So that's, I think, the key takeaway.
Sounds good. Thank you. So trillions of dollars needed, CapEx, a lot of opportunities, still fragmented industry, 80, 90,000 utilities. The consolidation has to go on. And then on data center, I would just add, actually, if you look at the semiconductor chip side, I think next 5 to 7 years, we expect 2.5 trillion CapEx. Taiwan, maybe 700 billion. US, 600 billion. Korea 300 billion, China 100 plus, India, everybody wants theirs because that's the oil of 21st century. And that capex, roughly 5 to 10% actually is water. I think this is like a less appreciated fact. Maybe you should pay attention to the scope 3 part of the whole AI value chain. With that, thank you for your time and hope to hang out during the lunch break.